We've all heard the debate that's been going on for a long time right now about what is important. Is it trading psychology or trading strategy, right? So I'm here to tell you what I think about this particular topic, and I think it's very, very important that you actually understand my perspective as well, right? Since most of you maybe are new, I've been in the market right now for 5 years, right? I've been trading the market for 5 years straight. And here is what I think is important between trading psychology and trading strategy, right? So when you're getting started in the market, let no one lie to you. The most important is the strategy. You have to have a proven strategy that has shown profitability over time. We're not talking about just taking one trade and it goes into profit and then say you have a profitable strategy. No. What we want to see and what you want to be convinced of is having backtested that strategy, and over time, over a period of time, it has shown that it's actually profitable. Okay? And by profitability, I don't mean 5 wins and then you think it's profitable. No. You are going to have a series of losses and wins over time. And by sticking to that strategy through those ups and downs is what's going to differentiate you from the next person. So it means that you have to backtest your strategy or test it and live test it to prove that it actually works. For example, let's say you have a 60% win rate, right? So that 60% win rate doesn't mean that you are going to win 60 trades in a row if you're taking 100 trades, for example. That means that you're going to take 60 trades in a row that are winning trades and 40 trades in a row that are losing trades. No. What it means that those 60%, it's going to be over a period of time, over a series of trades, not on a short-term basis. It's not that you're going to take 6 wins and 4 losses. No. Guess what? Those 60% of wins, they're going to come in a very random fashion. And also, those 40% losses are going to come on a very, very random fashion. For example, if you flip the coin right now, which is a 50%, for example, if you're going to guess whether it's going to be heads or tail, it's 50%, right? But you cannot tell me with 100% certainty that if you flip this coin right now, it's going to give you heads, right? You have no way to know. And anyone that tells you that they know exactly what's going to happen when they flip a coin, they're literally lying to you. It's same with the market, right? If I took a trade right now, I have no idea what's going to happen on that individual trade. And that's what you have to understand. Anyone that tells you that they know exactly what's going to happen on that individual trade, they're bullshitting. They're lying to you. So it's all about having a larger sample size kind of a mindset where you're thinking in terms of probability and larger sample size, not on a trade by trade basis. Just because you have a 60% doesn't mean that you're going to have 60 wins in a row and 40 losses in a row. If you look at the law of probability, if you have a 60% win rate, you have actually more than 80% chance of having up to 10 losses in a row. And that can happen. And most traders don't even take time to actually look at that. So that's what ends up happening. What ends up happening is that traders end up keep on changing strategies because their strategy is experiencing losses. For example, they have 5 losses in a row and then they switch to another strategy, thinking that that strategy actually doesn't work. They have to look for a new strategy that works, that wins 100% of the time. And why does it happen? This happens because there are some gurus out there who claim they have a 90% win rate and they don't show losses, they only show you profits and all that, right? So this confuses a lot of newbies because they don't see the losses everywhere, right? They don't see losses on YouTube. The people are only post the positives, and guess what? This messes up with their mind and their thinking, and then they come to the market with very unrealistic expectations, and they keep changing strategies over and over. And guess what? Time doesn't wait for them, and then they'll be in the market for 5 years, and they don't have a strategy. They just been changing strategies over and over, and it's very difficult for them to be able to actually become consistently profitable, right? So strategy is very, very, very important. You have to really have the data that shows that that strategy actually works. Okay, you have to backtest it. Ensure that you have the confidence. And that's one thing that's going to differentiate you from the next person, because when you have the confidence in the strategy, you can have 5 losses in a row and still stick to that same strategy. What happens when you don't have the confidence in the strategy? Then immediately you take 5 losses in a row or 3 losses in a row, what happens? You keep changing because you have no confidence in it. So whether you're trading our strategy, don't just follow my strategy, but test it for yourself so that you have the data, and that data is going to give you the confidence to be able to execute that strategy regardless of the outcome of the previous trade. That is extremely important, and I cannot overemphasize it. It's extremely important. The other thing that is extremely important is being able to have a large sample size. Like I say, you have to really have a larger sample size of mindset where you are focusing on a series of trades. Don't just look at one trade and then think, if it's a win, then yay. But if it's a loss, you're depressed. Trust me, that's not a way to trade. You can't make it long term. You have to think long term. Regardless of what happens in the previous trade, whether it's a win or a loss, your edge presents itself. You are supposed to take that trade. The moment you say, I won't take this trade because I lost the previous one, what you're simply saying is, I know exactly what's going to happen on this particular trade, which is often lie. It's a lie, right? So always take all setups that meet your criteria. And then once you've actually mastered your strategy, the next most important thing becomes your psychology. And right now, the psychology now becomes like the most important thing. For example, it will be like 90%, and strategy will be like 10%, because strategy is all about executing after you've identified it. But when it comes to trading psychology, it becomes now the most difficult thing. Why? It's because you now have to battle with your own demons. And unfortunately, our brain was not made to be trading. The human brain is not engineered for trading. Why? Because our brain is engineered for certainty. And however, when you're in the market, you have to have a different kind of a mindset, right? You have to have a different kind of a mindset when you're in the market, because you have to think in probability, and our mind was not made in such a way. That's the reason why we have very successful individuals in the outside world. For example, there are doctors, there are lawyers, there are engineers, there are accountants and all that, but they're struggling to make it in the market. Why? Because trading is different. In the outside world, you can work extra hard, you can grind and hustle all the way, and you know that, okay, there's a very high chance that of course I'm going to be successful. But in the market, you can do everything. You can do everything to the T. You can follow the strategy to the T. That same setup can still fail. And that's what most people fail to comprehend. And now for you to be able to consistently make money in the market, you have to change the way you think. Okay, you have to look at the market different. You have to have a probabilistic mindset. You have to flip the switch, just like Tom Hooker puts it. You have to become a good loser. And unfortunately, nothing in the world teaches you how to lose. The society doesn't teach you how to lose. Society tells you when you work extra hard, you're going to win. When you train extra hard, you're going to score and you're going to win. You can control outcome. Mostly it's a bit within your control. However, when you come into the market, everything is outside your control. News can come and actually take you out. There can be an earthquake somewhere in a different country that can affect the market. Literally, the outcome of the trade is outside our control. And the sooner you understand that, the better. You can do everything right and still lose. And you can do everything wrong and still make money on an individual trade. But you can't do that consistently. That's why. So when you are a technical trader like I am, we focus on patterns. And these patterns have a sequence of occurrence. They occur in a very random fashion, right? They occur on a consistent basis and then very random. And however, the outcome of those individual patterns are random. The pattern may look exactly the same. However, the outcome of those individual patterns are going to be different. They are very random. So you can take the same setup today in the morning, make good money. Take the same setup 10 minutes later, you can actually lose money on that particular trade. Why? Because the pattern may be the same or similar. However, the outcome of that individual pattern is random. Therefore, you and I have no control over outcome. And the sooner you understand that, the better. You're going to actually reduce yourself headaches of you trying to predict and to know what's going to happen. So focus on what you can control. What is it that you can control in the market? You can control the type of pairs that you're trading. You can control the type of risk that you are using on a particular, whether you're using high risk or low risk or medium risk, that you have control. You have control over your mind. You can try to actually work on your mind and manage your emotions. However, you have no control over outcome. You have no say whether the trade is actually going to go in a direction or not. And the sooner you understand that, the better, guys. If you can just know this, you are going to actually become a better trader. I'm telling you, no matter what you do, you will never know whether a trade is actually going to go in a direction or not. The only reason why we over risk on trades, on individual trades, is because somehow we think that that next trade, that individual trade, is actually going to go in our direction. Because if we understood at the core level that that individual trade, the outcome of that particular trade is random, there is no way you have over risk on that particular trade. The only way you over risk on a trade is when you think you know what's going to happen on that particular trade, which most of the time is often a lie. You're just lying to yourself. So adopt a series of trade mindset and focus over a period of time. So as long as the setup appears, keep on executing. You have control over that. You have control over that. So as long as the market gives you an opportunity, execute. It doesn't matter what happens in a particular trade. It doesn't matter. Just take a trade. Just take the damn trade. Next week comes along, take the trade. Guess what your mind is going to tell you when you have 2